Hello everyone, this is Ahura. I will be with you to review the US labor market data and check the financial markets reactions. As always, first let's check the data, what we have in the economic calendar as the result, and then we can see with these data what we can expect from the financial markets, different markets, and how they probably will react to these data. I have to say that these data are including the data for October and November's data, both of them. But we will focus mostly on November data, as the October data is a delayed data, which is going to be, which published a little bit later because of the government shutdown. We didn't have these data in October, and for the October we don't have all the data. We have part of them anyhow. ADP employment changed for November. Actually, it's increased by 16,250,000, which is fine. I mean, more than 4,750,000 that 4,750 that we had previous month. With 16,250, we can say that the market is moving fine on the labor market based on the ADP data. Average income in October increased by 3.7%. It's not a good number, which means that the people's income was lower in October, while on the annual scale, on the monthly scale, it increased by 0.4%, which is fine. On the monthly scale, the 0.4% increase is something acceptable. Average weekly working hours was stayed unchanged at 34.2 hours, which is fine. Government payroll in October fell by 157,000, which is acceptable number because of the government shutdown, and NFP non-farm payroll generally fell by 105,000. That was for the October. Going forward for the November data, we can see that average income increased by 3.5%, which is warning here, with only 0.1% monthly growth. That's not a good number for the labor market. We can say that the people's income is less. And when you have less income, you spend less money. When you spend less money, GDP is lower, retail sales is lower as well. We have retail sales data as well, but let's first check the labor data, and then we can get back to the other data. Payrolls increased by 64,000 NFP number, non-farm payrolls number, but private non-farm payroll increased by 69,000. Both of them better than expected, better than previous month. But at the same time, we can see that the unemployment rate increased to 4.6%. That's not a good number. However, we can say because the participant rate increased from 62.4 to 62.5, and we can say that now there are more people looking actively after the job. So that can be another reason. That can be one of the reasons, not the 100% of the reason we can say, but the one of the reason that we can say unemployment rate increase at this level. So unemployment rate is slightly higher, is not a good. Income is lower, which means that the people's income is less. They are spending less money. Demand is less, and when you have a less demand, it means that you have a less spending, less utilities, and inflation is also can be better under control. But still, that's for November, and after the November and the October data, these days were mixed. We cannot count too much on them, but still they can give an overall picture of the labor market, which is defined, which is stable, at least we can say. It's not a good number. It's not a bad number. Overall data is stable. However, market accepted that as a positive data because FedWatch tools before these data was showing 73% chance for holding the current rate at 3.50, 3.75% average. Now, after this data, that increased this chance of holding the current rate for January monetary policy meeting increased to 75.6%, which means that the market accepted that as a stronger, almost a little bit stronger, not strong, but stronger, a little bit, and that's why they have now more price for holding the current rate. So with this data, what we can expect from the markets? Let's check the chart and see with this data how the market moved and what we can expect for the further movements in the market. Market risk, or the VIX, slightly eased to 17.40 to 18.40 right after the data, but again started to increasing. As you can see here, again the risk is around 18.55, which means even thought slightly lower than the morning number, but still 18.55 is much higher than standard 15 level. So with this data, we can expect the risky assets still get more demand, still get their demand stable. Dollar index after data slightly eased, but that doesn't mean with this number that we had with the VIX at this level, we cannot expect further falling for the US dollar index, and we can see the dollar index can get the foundation here around 97, 98, and most probably will stay around this area until at least till Thursday, that we're going to have the inflation data. But these numbers, they are not the numbers that they can put too much pressure on the dollar index. As for the stock markets, these numbers, as you saw in the chart, these numbers are showing in the table that you saw that the numbers are showing the stable labor market. Is a stable labor market increase the chance of holding the current rates for January meeting. That's why it cannot be positive for the stock market. Even thought the stock market, they had a slightly initial reaction of somehow the positive reaction to that. But the general reaction is not going to be a positive. Side movement with the downside tendency can be the most expected reaction. As for the other markets or other indices, same as the Dow Jones and the Nasdaq, that's the Nasdaq chart. You can see the same reaction for the Nasdaq and almost same reaction for the Dow Jones. But generally, we can say these numbers are somehow the natural for the stock market, and we can expect side movement with the downside tendency for generally for the stock market. Since that we have a higher risk in the market, and for the stock markets also we expect side wave with the downside tendency, we can say that these numbers cannot be positive for the for other markets, including for the gold market. So for other markets such as safe haven assets like gold, we can say these data can be supportive. As mentioned before, several times I talked about that. When if there is a more chance for rate cuts, it means that the weaker US dollar, we're going to have weaker US dollar, we're going to have lower yields, and that can be positive for the gold. On the other hand, if we have a positive data and we increase it, there is a more chance for the holding the current rate, or we can say for the hawkish policies, then it means that the pressure on the stock market, and we're going to have a money flow out of the stock markets, and that can again go towards the safe haven assets, including the gold. So that's why these data can be positive for gold for India. Now that gold price is trading around 4,328, and then we can expect to continue positively. As for the other markets, including the cryptocurrency market, we can say these data are not such a good numbers and a positive data that can support the idea of increasing the prices in the cryptocurrency market, as we saw that the market risk is still high and uncertainty is there. So there is still less chance for the rate cut. The chance for the holding the current rate is higher for the January meeting, and that these data cannot be supportive for the cryptocurrency market, as well as it is not so much good and supportive for the stock markets as well. So in short, we can say that these data can be natural and natural with the downward tendency for the stock markets, and we can say at the same time for the cryptocurrency market. But for the gold, we can say for the dollar index, we can say these numbers means that US dollar index can even with the negative reaction to these initial reactions, it can get again strength and get stronger. And these numbers are not the numbers that can put too much pressure on the dollar index. Hope that was useful for you, and you can use it for your trades. Talk to you again that after the data we had for the inflation numbers. Have a good time. Bye.